Hey guys, go talk about WIMI and MLGO. Actually, both longs. My broker was having trouble getting shares of MLGO on Trade Zero. I kept getting no shares available. Then it would be available. I would hit locate. It wouldn't work. And then I just kind of gave up. But I did take a long on it. We'll go over that. I was looking for some market open longs because I noticed that pre-market volume has been flowing back into low floats, which made me think there'd be more continuation in low floats, which was a major departure since last week and the week before. Low floats over two were very weak, pennies were very strong, and now it seems like low floats are getting a bunch of volume coming back in. So I wanted to be a bullish bias, not on MLGO. I was actually not planning on longing that. Um, Actually, if I had shares, I probably would have taken two different trades, one near market open and another one later on. We'll go over that, but really fast, WIMI. First of all, I like the pre-market structure. This quick pre-market pop and dump. I don't know why I'm doing it over here. This quick pre-market pop and dump. These could be very strong, especially when they're opening. I think this was opening up 25-30% on a day. And on these plays, I'm usually looking for volume to come in, so half a million shares a minute, and I'm looking for a knife in the bids, right? Mikey Underdog, Mikey Mad Dog, and I did a private conversation that we shared. It's on my Patreon if you want to, which also gives access to my Discord if you want to join that. But we talked about how for the market open long strat, we don't like chasing green candles at market open, right? You really want um, you want, a nice bottomed out pre-market structure, especially these quick pre-market pop and dumps. You want some support levels on the daily. Mikey goes over that a lot. You want market open volume. And usually you want some type of, if market open volume comes in, you want it to pull back. You want it to kind of push with volume, pull back, go over my MGRX video. You'll see what I'm talking about. And maybe some bids or some soaking at a key level and then rotation. This makes it easier because the problem with chasing green candles is that it's very hard to size up. Now, if all your entries are just one order entries, then it's not a big deal. But if you're doing more than that, it could be difficult to size. And also, you tend to get better plays. You just tend to get plays tend to work better when they knife and then squeeze. Right? That's always in low float land and pennies tends to be they just it's the the long shakeout and the short trap before the push, right? So anyways, this was doing crazy stuff. So right at market open, volume came in. They started stacking 400,000 shares on the bid. Now, if you get a long based on that bid, and you can see this bid on the book map, so we actually looked at the book map, but if you get a long off that bid, you need pretty much an immediate reaction. And if that bid gets pulled, you need to get out. And what they ended up doing is they ended up walking it up. They pulled the bid, and then they squeezed it, and there's like almost no time to react. So I wasn't in that at all. So this wick right here is like you could have super big brained it, but I didn't get it. However, what we got was a high day clear out on big increasing volume, and then a massive knife down to the 1 minute 20, which I really love to see. I was like, I'm gonna make a read on the 1 minute 20. These quick massive knife candles. You'll see here. Um, it's this pullback. So here's like the crazy manipulated squeeze, and then we get the quick pullback. Here's all the volume coming in, and here's the pullback. Here's the 1 minute 20. It's also VWAP. Gave it a little swipe below VWAP, which I do like to see. But most importantly, it had a bunch of bids on the book, so we'll see that really fast. So I actually already have it open. Here's that 400K bid. If we zoom in, they actually pulled the bid. It's sold down. And then this was like an instantaneous 900,000 share market order that went straight up. And there was like almost no, unless you were just accumulating down here, which you could have, but it's hard to accumulate. Ideally, I was actually looking to see if I could soak down here, but the reaction was so fast, I wasn't able to get in. But then I got a secondary pattern where it walked down to the 1 minute 20. They threw up a big bid. I just started going long. And I was like, oh, that's a good idea. Because keep in mind, like down here, the stock's still only up 35% of the day. I thought I had a lot of room to the upside. And it started rotating. I took some off because this is like the long trap candle, like the big push towards highs. I usually like to, especially if it starts aggressively pushing towards highs, I like to take some off. In case of long traps, it started getting walked down. I told my roommate I'm just gonna put my risk at like 10. 110 was like the main bidder that was being held here. I put my risk at 109, just keep it tight. It rotated back up. But what you need to know about these rotations, as you see, this went from deep support straight up the high day on a very painted 125 level, right? 125, 125, hyper aggressive move. These tend to be the better high day clearouts. In my mind, this is like an aggressive move to swipe that liquidity before potentially pulling the stock, right? So I said in my room, like, man, I hope this has continued. I sold some here because it's the obvious liquidity level. But I was like, man, this really needs to have continuation, right? Like, because the more aggressive the move is the high day, if high day starts to get really heavy, it's not good. It's really not good. But then it started pulling back. It started getting walked down, walked down, walked down. I was like, let me try holding for like a midday rotation. So a recent theme starting last Thursday and continuing till Friday and yesterday and potentially today was midday rotations, right? You're getting pullbacks in the morning and pushes in the afternoon or midday. So I was like, let me just keep my risk at 109 and hold it. And then this push didn't go. They did another walk down. You can see how the liquidity traps work, right? You could see the walk down. You walk it down, walk it down, walk it down, squeeze the backside. The problem is when it got to over here, there was a like 280,000 share ask at like 126. And I was like, man, is it like, does this really have the liquidity to push through that ask? It turns out the answer is no. But you could tell the walk down got walked down to the 1 minute 200. 110 is still being defended, but now what does that mean? We got higher lows, higher lows, higher lows, right? Which is bearish. It's a bearish factor. The more high lows there are, the more likely something like this is to happen. And then when this liquidity move failed, a lot of times when you get bid props at support, I went over this in other videos, but when you get bid props at support, higher lows at support, a common thing to do is to do one last liquidity push and then pull it, and then this becomes, this is already bearish, but this becomes super bearish. Like down here, I just kept my risk on 109 because the risk was pretty tight. I didn't care too much, and I already took profits earlier. But this actually becomes much more likely to break these higher lows because the liquidity move already happened, right? So not a lot of range, so I'm not surprised it kind of just chopped around and closed over here, right? Not super surprising. We'll go over MLGO. I'll show you my one long. But I definitely would have shorted this. People in my room shorted this. I don't blame them because how could you? Just because it didn't work doesn't mean it was necessarily a bad choice. I longed the high day clear out short trap for $1, $1 per share, and the reason I had in mind that I was going to sell the whole thing up here because when you long at the top, when you're long in a stock up 300% and you're doing some manipulated long move, like unless it just starts going insane, unless it's just green candle, green candle, green candle, green candle, it has like a lot of bid support, you pretty much want to sell because kind of a lot of these moves, a lot of these aggressive squeezes top out before big pullbacks. And if your average is like, if your average is up here, maybe you would have got shaken out down here, or maybe they would have walked it down lower first and then push. You never know what they're going to do. So when you're longing at the top, you kind of have to take profits when you can. But yeah, we'll go over this chart because it's kind of insane. A lot of insane stuff. There's actually, I linked, in my Discord, I linked JFIN from back in the day. Anyone who's been trading for a decent amount of time will know this chart. Very similar parabolic, where on the backside they just start swiping ranges, swiping. And now I don't have the book map for JFIN, but I do have the book map for MLGO. Maybe I should actually go to when it existed. That's kind of what they're doing on the backside here. And if anything, I actually consider this to be ultra bullish, right? This kind of did a liquidation dump back in December. And I'm like, man, are they really just doing the same thing all over again? I'm like, why not? Maybe they are. But when it started rotating back above these lower highs, I was like, oh, I mentioned my Discord. I was like, this heavy walk down can actually be really bullish because especially if people are shorting this expecting some type of liquidation to the downside, they could play a lot of, this is a lot. This is a 50%, like 10 million shares dump. like look how consistent. I thought this is why I thought it might go straight down. I'm like, man, look how consistent the selling is. That's very common for like insider dump liquidation type stocks. So, but it didn't do that, right? It kind of switched behavior. The lower highs off the 1 minute 50 are pretty common, but once it started, rotating and picking up volume, and we'll look at the book on that. But let's focus on this. So market open. Now Thinkorswim was like down for half an hour, like it wasn't working for half an hour. But essentially what happened, it went from 3.6 all the way towards pre-market highs, right? And a possible thesis of when you get an aggressive, hyper-aggressive move towards high a day, in this case, highs was like 542. A lot of times they'll hyper-aggressively push it into open and dump, right? And the book was actually decently bearish, and I would have absolutely, if I had shares, I would have absolutely taken this. But the book also gave us a lot of signs that some hanky-panky business was going on. So market open, we get a push, eats through a bunch of ask, minimal bid support, pulls back, asks start following it down. Those asks get filled with middle bid support, and then it starts pulling. This is an interesting short, right? Kind of a long trap because everyone thinks high day is going to get broken. It just went from, look at the push, man, 3.6 all the way up to like 2 cents below high day. Just an insane push. Filling a bunch of ask, minimal bid support, looking really nice. Like big brain market open short, right? Everyone's going to be bullish that situation. And then what they did is it starts to work. The first pop comes in, no bid support. That gets knifed. Classic like high volatility, high volume action. But then the bids come in. And it's not just one bid. It's kind of a lot. They swipe $5. It's lower high. Now, also, what's the bullish thesis? We had the lower highs from the pre-market, and now we have this lower high, this lower high, this lower high chart paint, right? We're getting lower high chart paint. And it's like, it's at 542 high day from like 5 in the morning, plus it's like 4 additional lower highs, all really tightly close to each other. And I think he's trading 2 million shares per minute. A little scary. You gotta consider the squeeze, right? And that's why the squeeze up halted, right? The more, I've been talking about, you could be discretionary with your risk management, right? Especially in low floats and especially on these high volume plays where, you have a bunch of stacked lower highs all at the same level, right? And then, say you short and you get a nice like long trappy move to get into on the book. When it starts, when they start throwing up bids and rotating it, you have to understand that everyone has their risk at the same levels, which is why this essentially goes straight up. Straight up teleport with a massive gap up, right? So if everyone's going to have their stop losses stacked at 540, 542 or whatever, and you're in a move, you're in a very long trappy type of move where it's like, oh man, they're filling ass, there's a lack of bids, my thesis is they're just running this up into the open and they're going to dump it. Well, when you get the reaction you want and it starts doing things that shouldn't happen on a long trap, the thing is when you short patterns, you should have knowledge of what is common fading and what is uncommon fading action, right? Like what theoretically, and we'll get back to this later. Of like things that should happen if this long trap is to work, this should happen. If the exact opposite, and then you should also know what absolutely should not happen. And the book can help here. That's why the book's so helpful, because in the extreme situations, like look how many bids. Look at the bids hold. Look at the rotation, man. And then here, this is where you can start be like, you know what? I'm just gonna put my risk into 530s, right? I'm not gonna get up pulse squeezed and all this stuff. The painted lower highs, there's 4 of them, 5 of them, all at the same level. Everyone, the thing's trading 1 billion shares a minute. It's a low float stock. It's highly volatile. The book is crazy bullish because of these bids holding in a rotation. I'm going to make adjustments to my risk, and you could do that, right? And, a lot of times you could get in, like, say you get in, 520s and you get out 530s, and you take a 2% loss and the thing squeezes another 300%. You know what I mean? Like, I do stuff like that when the levels are heavily, heavily painted. And this is the HoD Clearout short trap. So just getting to here. This is the long end. This candle, literally this candle, here to here, just along this candle, this to here. So HoD Clearout, right? Very common for parabolic stocks, especially when you get these tight consolidations. They do a second push and pull. We saw this on last week on this exact price action. Huge squeeze, second push, pull. What was that stock? It's a very common it's a very common liquidity trick at the top. Man, what was that play? I'm gonna find it because it's useful. It's useful for this. BNAI back on 529. Let's just look at BNAI really fast. On BNAI. This idea. Huge squeeze, tight consolidation, secondary clear out and pull. And this was high day for this day. But this ended up going on a crazy run. But anyways, doesn't matter. Back to MLGO on this day. So that's the idea behind the short, right? Big push, consolidation, second high day clear out. You short this candle. Let's look what happened. I thought the volume and the price action on this was absolutely insane. And then, yeah, we'll look. So here's your high day clear out. Here's the pull. Here's the lack of bid support. Here's the pull. And then, oh my God, this is like, in terms of high day clear out short traps that have potential to immediately squeeze, this is like an ideal book. Look at all the bids come in. And I longed when you got a middle, when this dipped and it came back up and they restacked the bids and the bids held and it started rotating. So I went long, 710-ish, somewhere around there. But with the idea that I'm going to sell into the liquidity, right? I'm going to sell into 8. Lack of bid support. Bids do come in later. But yeah, you could tell, like I was in 710s. They walked us down all the way to the 680s. So let's look at that. Let's look at a price action, right? Again, a lot of very smart short sellers who are very successful shorted this. They didn't short this candle. They shorted this because the idea behind shorting this is you trap shorts on the obvious candle that shorts like to chase. You squeeze those shorts and then you roll it over and you fade it. And hyper aggressive move, super aggressive, super crazy hyper aggressive. A lot of bearish factors in extension. Like I said, I'm less concerned about gapping percentage and more concerned about how a stock got to where it is. And this stock was super aggressive, so I actually don't blame anyone for taking this. It's like I told them, I was like, well, on the crazy 2 million volume per minute, $8 stock, on the crazy volume plays, I do like to wait. I always think a rotation later is coming, and I like to make a read there. And this is a classic short for me, right? I was like, I would have 100 if I was clicking shares around here, and I was like, Trade Zero was just like giving me that error 11, no shorts available BS. And then other people in my room got them for like 2 cents. I was like, anyways, I would have totally taken this. Nice, clean walk down. Right? What do? They're holding 7, holding 7, holding 7. Always be very skeptical when obvious retail support levels are being held. Okay? Also, it's kind of in between the 1 minute 20, 1 minute 50. So it's kind of in no man's land. A very obvious retail support levels can walk down. And then what do? They swipe it, bounce it off to 1 minute 50. Nice little fake 5-minute flag initiation. Big push towards highs. Highs was at 850. This broke 8. Hyper aggressive. Super nice. Not only that, pulled back, second mini push here, and they pulled it. I was like, wow, that's a great short. I was like, what's that shares? But I told them, I was like, hey, what should happen here is the 1 minute 50 is holding here. The 1 minute 50 is holding here. It needs to crack through the 1 minute 50, through 7, because 7 is where the bid was here, and then through 680 and go down. That's what needs to happen. And man, this thing, look how aggressive this thing was. This thing spent 5 minutes soaking and just started instantly rotating, right? And this gets back to what I'm saying. It's like this is the exact opposite. If this, the way these long traps at the, the way, look at the fake 5 minute flags at work, right? This is the exact opposite. This is as opposite as you can get, right? The same MA should not be holding. The $7 bid there should not be holding. And then when you rotate this, again, you can make adjustments to your risk. Do you risk high day? Or do you risk some of these lower highs? Maybe you put it below 850. Maybe you put it in the 840s. Like, hey, so I don't want to get slippage, right? Because every time, this is, in my room, we call this the long trap turning into the short trap, right? That's how the higher a stock goes, the way stocks move up is you're very rarely ever going to get clean longs, right? Here's a clean downtrend. Here's a common MA retail uses the long. Here's the rotation, right? Here's the rotation. These especially once you start getting like, the stock is pushed like 1, 2, 3, 4 times. The stock's up 200%, 300%, 500%. The higher it goes and the more it's already squeezed, the less likely, clean flags and clean, downtrend breakouts are going to work, right? What they usually do is they do some crazy knife move and then they do the move, right? What I used to call the real long. Anyways, starts going nuts. At this point, again, they do another walk down. It's the same thing. Lower high, lower high, lower high, lower high, rotation. And this was just, I saw this rotation. I was like, dude, this stock is just, all these squeezers are doing these like insane $1.50 candles, like all these 10, 15% candles on a stock that's up like, 4, 5, 600%, just insane range, right? Pure low float strength, right? Exactly how low float squeezers move. And again, this actually looked like a decent short, right? And a lot of it is the avoiding the short is either waiting for a pullback and waiting for weakness to be confirmed, or in my case, I was telling a few people in my room, but this was through DMs, but I was telling them, I was like, hey, you don't have to keep trading this. You don't have to keep trading it. It's fine. It's fine to, like, if your big brain, market open short didn't work, and then this long trap trade didn't work. Like, you don't have to. You can stop. You just stop trading it. It's not a big deal. You don't need to keep making reads, right? And I have, there's plenty of charts of stocks that went up 500%, and maybe they went on multi-day runs, maybe they pulled back for a couple of days, they squeeze later in the week, like, a lot of people in my room, it's like, oh, do you want to make reads in the 11s down here or somewhere down here? Do you want to make any reads, short reads down here? I'm like, there's too much space, man. There's too much empty space. I don't like my average to be down here, right? Unless it's something crazy painted. I just don't like my average. And then I remember JFIN. I'm like, this kind of reminds me of JFIN. And I was like, and JFIN was, unless you're scalping, you actually make a lot of money scalping these moves. If you have the read that like, I'm just gonna make only scalp moves, like you can actually just like short here, wait for a range to form, short the range break, cover, like short the range break, cover. Like you could actually, if you really, but the only thing about that is this type of thing is not normal, and you'd have to have a really, which another way of saying that means it's super rare, and you'd have to have like an insane read. But yeah, I'll go over to this push right here, because yeah, it's rough, man. Like, everything we kind of know about backside short long traps kind of fits the bill on this candle. And what is this, 1148? And yeah, man, it's just hyper aggressive. Let's go to 1148 just to look, and then I'll end the video. So yeah, I did get kind of like 1148. Here's that push, right? Just hyper aggressive, fills all these asks with very minimal bid follow up, and if anything, these micro bids are getting pulled. Looks nice. Stock super extended. How many legs up can it really go? Looks nice. I don't blame anyone for instant taking this, but man, you would have had to be on top of your risk management, man, and not get caught in up halt. Just like, yeah, where was HoD on this? I mean, the range on this was so nutty. It was exactly at 13, which is also a little concerning. Fake whole dollar resistance and all that stuff. So, but yeah, I mean, you would have had a short into this strength, into 12s, and you just had to get out at 13, man. There's nothing you can do. I would recommend, I was telling people to stop trading this. If you wanted to keep trading it, don't blame you. But yeah, you got to be, this is just one of those tickers, man. And the way these tickers end up topping, and it's just, every short buddy that ever tells you, it's like, yeah, man, I'm in like 13.8s or 14.2s, and yeah, I got in on this. And then every single one of those people tell me, like, well, but I'm still super red on the day because I shorted it 3-4 other times on the way up. You know what I mean? It's like a lot of people who end up catching this trade up here are the same people that took a lot of losses on the way up, right? Unless you're using the book to read the bid manipulation. Look at all the bids. Look at all these crazy bids come in, You can de-risk on massive bids on crazy stocks. Like, not a bad idea. Here's that $7 bid. Here's that $8 long trap I absolutely would have taken. Here's that bid. Here's a rotation. Crazy play. Just crazy play. Anyway, my heart goes out to anyone who lost a lot of money on this. I mean, it's been a while. I will say, I was like, man, I think I was saying on my Discord like a week ago, I was like, man, we haven't really had a crazy low float run. FFIE was like a multi-day penny runner, but we haven't had a crazy day one gapper massive continuation low float runner since like, I don't know, a couple months, like early April when stuff was going crazy. It's been a while. And when it's been a while, when it's been too much of a while, you got to be careful. You know what I mean? That's when they strike. They strike when it's been like 6 to 8 weeks and something super insane has happened. Like that's when FFIE was pretty insane, but I would put multi-day penny runner kind of in its own category. Interesting to see what happened here. I mean, they swiped 12 at the end and now they're walking. I mean, I don't know. I'm okay. Again, I'm much more okay with missing, not being in trades than other people. It's fine. It's not a big deal. This could go down. This could be at $3 tomorrow, and it's fine. Not a big deal. Anyways, that's it for today, guys. Low floats. These low floats above 2. You could tell by the pre-market volume and the price action. It's getting stronger. Last week and the week before, it was all penny stuff. Every pre-market, my room was waking up. Like, look at all these pennies. But now it's the low floats turn, it seems. So something to remember. Anyways, that's it for today. You guys have a good one. I'm seeing you tomorrow.